Hey, what's up, everybody? Just gonna go ahead and start a video recording to go over a quick onboarding guide for the Heatseeker. I was gonna go ahead and run it as live stream, but generally when I do live streams, it goes a little bit longer than expected because of all the questions. This one's just gonna be clean and cut to the chase, so that people just, spend their 10 or 20 minutes watching over it a couple times. And then by tomorrow, when I open up the free trial in the Only Bangers Discord, everybody should be, ready and off to the races, okay? Just a quick overview of Heatseeker and what it is. Before zero-day expiration options came out, the market used to ebb and flow in a way that people are most familiar with, okay? Like you would see clear trends, you wouldn't have as much chop, like you would just see like a lot of momentum trades happening. When we reverse, like there are usually clean reversals, and you get like a lot of trend days, which means that the market just keeps on stair-stepping up, or in the case of the bear trend, the market will continue to stair step down. So I know a lot of people like they started in COVID, even post COVID, like momentum trading was the shit. Like it worked really, really well, which made money incredibly easy to make in the market. One major change, actually, there's two major changes that happened. Okay, one thing is that there's a lot more retail traders that are flooding the market. Okay, and the market is literally designed to snipe money from these people. Like the market is literally it's an engine or a mechanism to transfer money from, dumb money to smart money, or transfer money from the impatient to the patient. In most scenarios, retail traders are impatient. They want to make money, so they trade often, they trade a lot, and they trade recklessly, okay? That's number one. Number two is that they released zero-day options, which means, SPY, QQQ, SPX, NDX. Those tickers have option contracts that expire every single day now. Before that, they only expired, I think, I don't even remember. Maybe they had like Wednesday expiration and they had like Friday expiration, or at a certain point, they only had Friday expiration, which generally meant that there was less manipulation going through the week. And generally, what dealers would do is they would just try to pin the price at a particular point by Friday when the options expire. Okay. What you're seeing now is that since options expire every single day, dealers are getting a lot more active. They're getting a lot smarter because they don't want retail traders making money on any day. Like it's not just Fridays anymore. They want to take money from you on Monday. They want to take money from you on Tuesdays, Wednesdays, Thursdays, like you name it. Like they just want to rob you. So the reason I built Heatseeker is because a lot of people think it's a smart thing to do to track whales, or big money, so called it. And like you see a lot of people trading flow. I actually think that flow is a lot more effective back in the day. It's becoming more and more ineffective, primarily because like everybody's using it now. Like flow is just mainstream at this point. So you always got to stay a step ahead. And one thing for sure is like I feel like dealers always have the upper hand in the market. Like they have a lot of control, they have a lot of power. So if we were able to develop a mechanism where you can see how dealers are positioned across the market, then it's ideal for us to be able to understand that so that we can go ahead and play to, how they're positioned, right? Like we can kind of forecast and project how they're going to want to make the markets move. Okay? So that's how Heatseeker works. If you look at it, let me just go ahead and go into these channels, which you're going to get access to eventually. Um, like this entire heat map that you see here is showing how dealers are positioned across the entire, like literally every combination of like expiration and strike price for SPX. Currently, I only have this for SPX. It's the most accurate indicator of how the market moves as a whole because SPX tracks the 500 top market cap companies in the world. So this is, or at least the ones that trade on the US stock market. This is just a good indication of how the general market's going to ebb and flow for the day. Like a lot of people ask me, like, "Oh yeah, hey, I don't trade SPX. Like, why does this matter to me?" It matters to you because in most scenarios, unless there's a unique case that's happening where a ticker gets news or something, most tickers are going to follow along with SPX because it's the best indication of how the market's going to move. Okay. A lot of people read my previous recordings, but if you haven't and this is your first time, Like this is pretty much it's a heat map. My tool is called Heatseeker. I develop and pump out heat maps every 15 seconds, which essentially shows dealers' positions and TLDR, like the yellow magnets or the yellow nodes that you see are like positive positions that dealers have where price will essentially try to gravitate towards. And as price gravitates towards it, you'll actually see that this node becomes deflective. So what I mean by that is if the price is at like 59.15, it's going up towards 59.30. It actually might not hit 59.30 because price is supposed to deflect against that yellow node. So what I generally tell people is like, hey, if price is approaching 59.30 and there's not a greater like yellow node that's forming above it, that's probably an indication that you should be looking to take profit because otherwise the price is going to deflect and then your premiums are going to be jacked. Okay. These purple nodes are like I call them negative nodes. These are also magnets, but generally speaking, if price is above it and the price pulls back to that purple node, like that major purple, you can expect the price to bounce from there. So let's say like we're at like 59.20 on the day, right? And we have a yellow node at 59.30, which is 22 mil. We have one at 5900, which is negative 13 mil. Let's just say like we're at 59.20 and price is pulling back towards like 59.10, 59.05, and this 59.30 node is still very, very bright yellow. Like it's barely moved. I call that a buy the dip map. It's like, as we're retracing down to 5900, I'll be looking to buy the dip with the expectation that there's going to be upside gravitational pull back to this 59.30. Okay. Now, personally, like I've gotten to the level and I've gotten to the level of intimacy with these heat maps where I could literally trade with just the maps. Like I don't even have to look at a chart anymore. But for anybody that's using it for the first time, the simple set of rules that I have is price action always comes first. Heatseeker is a very, very close second. And then you layer on like any indicators that you use after that. Okay. Like I have an algorithm that I use as well, but that's number three on the list. Like I would probably rank Heatseeker like a close number one with my price action techniques. So, if I see 5900, like I go to the chart and I'm like, okay, there must be, some kind of support level there, or there must be some kind of like, liquidity zone there that's gonna hit and bounce off from. And if it lines up, then that's a high probability trade. Like that's like, probably a 70 to 85% chance of playing out based upon some, back testing and forward testing I've done. And that's how I built the confidence to take that trade. Now, one thing to note is if the floor is showing us 5900, but you notice the 5930 like dimming out, like let's say this 22 mil became like, 10 mil or like 8 mil. Like that is not a good sign. That means that this 5930 magnet has weakened significantly or tremendously, and price is going down, and that gravitational pull is going to be weak. So you're not going to get that strong of an upside pull, even if it did hit the bounce zone of 5900. Okay. So these magnets, 5930, 5900, think of these as magnets that result in gravitational pulls on price. So even if the 5930 is here, there's two reasons why I said it's likely not to hit. Number one is because price is deflective leading up to it, but also because the 5900 is still negative 13 mil, which is like, it's still pretty strong, right? It's one of the strongest nodes on the map. So even as price is going up, this magnet is going to have some downside pull on it. Okay. So this is a pretty clean map like that I showed you. So these are the obvious ones. Like if you see a setup like this, like it's very, very like clean and generally like I always bite the bullet on these. Um, Tomorrow morning when you log in, like don't rush to take a trade off of these heat maps. Generally speaking, like I advise people in my server to never really take a trade in the first 15 to 30 minutes. And the reason you don't take a trade in the first 15 to 30 minutes is because there's actually data like PhD papers and data that shows and proves that the first 15 minutes is when you see the largest quantity of institutional selling of option contracts, which means that this could be very, very unstable. Like all of these numbers can like flip in the matter of a blink, and like you're seeing big, big orders like coming in and out in those first 15 minutes. When that's happening, like you just don't have stability with regards to like how things are kind of, panning out. So, um, if something is very obvious, like you can take a trade based on it, but you just have to be quick. Like if as soon as you wake up, like 5 minutes in, like, let's say like 5,800 is growing really, really bright and we're at like, 5,905 and there's no upside pull, like that's a pretty strong sign that like the market's gonna sell off and you could try to snipe something, but um, just be quick to, keep scrolling. Like this is gonna be a live scroll, which shows a map every 15 seconds. And just note any changes that are happening or like any major repositionings that are happening to make sure you don't get caught. Okay. Um, Let me just try to. I'm gonna try to assume like some of the questions that are gonna be asked right away. A lot of people are gonna ask like, "Hey, does the map change often?" My answer is right when the market opens, yes, and I explained why it's gonna change often. Towards midday and towards the end of the day, it starts to stabilize a lot more. And that's generally like when I prefer to take trades. Like I like to trade trades, an hour into open or in the last 2 hours. I don't like to trade during lunch because lunch is just usually choppy and pretty slow. Um, so yeah, that's one of the questions. I mean, immediate follow-up question might be, why does the map change so often? And my answer to that is it's changing often because the dealers are repositioning often. Like these guys are like they're quick, they're slick. Like their job is to literally crush your option contracts. So like they're gonna keep on repositioning themselves in the way that's most favorable to them and least favorable to the herd. And like I always tell people, you don't want to be caught in the herd. Like don't be a trader that follows the herd, okay? Like you want to be a lone wolf, you want to follow your own path. That way you're not getting caught in like the games that these dealers are playing with you. So it's good that we're able to read their hand, we're able to see how they're positioning against the herd. That way, like we can kind of blaze our own trail and take our own trades based off of that. Okay. Some people won't like the fact that like the market is that fluid and changes that often with regards to like what the likely price targets are and like how everything is going to move. But guess what? Like that's actually how you're going to have to adapt with this new market that has all of these zero-day expiration contracts. Otherwise, you're going to get destroyed. Like there's no pride in being a bull. There's no pride in being a bear. There's only pride in making money. And if you want to make money, like you've got to trust me that literally in the market, like every second, every minute, things can change. Like we no longer like you can't like use this Elliott wave and be like, yeah, the price target is going to be like this within the next, 3 days or 4 days. Like nobody can project that far ahead, because like literally anything and everything can change depending on new orders that are hitting the tape. Okay. So, this is the new era of trading. This is the new wave that I'm, trying to implement and teach people. And I hope you guys find it useful. One thing that I'll do is like, I'll try to show like an example of a dirty map. And like a dirty map is like one in which I'm like, yeah, this map is looking bad. Don't trade it. Um, like I have a lot of those. Like the cool thing about using Heatseeker is like, when you don't want to trade. Like, I think the biggest problem that people have right now is like they don't know when t things are going to chop. They don't know when things are going to like trend up. They don't know when things are going to trend down. So like they're constantly guessing and like they might enter a trade because something looks like it's going to break out, only for them to get stuck in chop and then their premiums just get destroyed. Okay? So I think on Friday we had a period in time when things just looked really bad, and let me try to find that real quick. Let's see. This was on May 29th. It's not it. It's on May 30th. All right, so this is kind of a good example of like actually, yeah, this is piping like every 15 seconds, so it's pretty tiring to scroll and zoom through, but let me see if I can find something for you guys. All right, I think this is an example of a pretty dirty map. Like this is bad. Like it shows 59.30 here. It shows a floor at 59.15. It shows another floor at 58.50. Then there's like one crazy downside magnet at 5800 right here. So let's see what the price is at right now. At 11:37, we're at 58.91. 58.91 on the map is right around here in the middle of nowhere. Like my read on this would be that, we have equal pull between 59.30 and 58.50. Like it's pretty damn close in terms of number. But we also have like a random like downside like positive node at 5800. that's gonna give a little bit of assistance for this 5850 to pull, okay? Like that's gonna be my immediate like guess. But like I just don't have confidence in this trade because on the flip side at 5960 you have upside pull as well, right? So it's almost a 50-50. I would just say that the 5850 here is a negative 4K. The thing with purple nodes is that as price sells into those purple nodes, like you get more volatility and like the moves happen a lot faster. So let's actually see what happened here. We're at 5882, or 5892 we're at, right? And then that's how the map looked. And like I'm gonna assume and think that we probably sold off pretty hard. Okay, so we bounced a couple of points. Um, but that purple magnet is definitely going to give some downside pull. Like now we're down to like 58.73. Like it's happening pretty quick, right? And look at this, boom. Like this is literally a 15-second interval where we got a 10-point drop. Remember what I was mentioning is that this purple node right here, this 58.50 at like minus 5 mil, like that's going to have downside pull. And also as price goes down, purple nodes results in higher volatility, which means it's like adding oil to a flame. So you just see crazy sell-offs. Like a 10-point drop in a 15-second interval is like, that's madness. Okay. So, it keeps on going down, keeps going down. Like, you're pretty much seeing it happen. And then this 5,800 pull is the highest now. But, you know, probably people were following along, but what I was mentioning is that these purple nodes, they become floors. So generally speaking, like if 50 is the target, like you want to be selling your puts into it. Like, okay, like right here, we've already hit 58.50. It's at -6. And I generally recommend people to sell into that, even if there's slight potential that we hit 5,800. Like you can leave runners if you think it's gonna hit. But I'm pretty sure even if you looked at the chart, like the chart was oversold at this point, given how fast we dropped. So I would have expected it bounce and told people to take profits there. And let's see. Yeah, 58.46, like it wicks down below like 4 or 5 points, but immediately it reclaims it, and then you probably see a mega bounce happening here. Yeah, yeah, yeah. Then yeah, it comes back down to 58.50, but like the support still holds, and then I think we just bounced all the way through the end of the day. But yeah, that's generally how I read things and how it looks. Like it might be a little bit confusing, but I'm gonna open up access tonight to give people the opportunity to kind of go through and backtest everything. Unfortunately, like the only way you could backtest it right now is just by like scrolling up nonstop. So hopefully you have an infinity scroll wheel. Over time, like I'll be implementing a historical search feature where you can just type in a date and time and like you can pull the nearest heat map for that date and time. But that is coming in the next couple of days, so you don't have access to that yet. Okay. So yeah, like when the chart looks bad, you don't have to trade it. When the chart looks very obvious like this, like these are good opportunities to trade. Like you buy the dip into 5,900, ride it back up towards 5,930. Um, a lot of people like mistake this. Like they see this major node at 5,930, and they think they should hold their calls until that. I actually advise people not to do that because the math that you have to do is that even if it bounces at 5,900, if this node does not let off from minus 17 mil, you can expect this to still have downside gravitational pull. So at that point, the calculation I'm doing is okay, 22 mil, 17 mil, like they're almost close to number. So I would give it like 60% upside from here, not 50% because like this number is still lower than this one. So I would say 59.15 would be like the 50%, 59.20 would be like the 60%, okay? Um, and I'm pretty sure we bounced, we hit 59.20, and then like you should be taking profits at that level already right here. And then yeah, probably yeah, it just rejects there, okay? And goes back down to 59, goes back down towards 5,900. So yeah, those are just some quick tips and tricks. Like I know it might sound a little bit foreign to you, but I have other recordings on my YouTube channel, so go through them for more real world examples. Long story short, the brighter the yellow magnet, the stronger the gravitational pull. The darker the purple magnet, the stronger the gravitational pull. They are both gravitational pulls and magnets, but the purple leads to more volatility in how price moves, kind of like adding oil to a fire, whereas the yellow zones are more deflective, meaning as price approaches it, you can expect things to slow down. Okay? So that's the power of heat map. Like all you have to do is like look at colors and look at the numbers. That's the strong benefit. The strike prices are on the left side. The expiration dates are on the x-axis. So I think tomorrow when we open up, the 602 is going to be the first row. Again, I advise you don't trade in the first 15 to 30 minutes, but after that, you should be off to the races. Okay. So best of luck, everybody. If you have any questions, ask them in the YouTube comments, and I will go ahead and get to them as soon as I can. And yeah, probably at like 11 p.m. Eastern, I'll open up these two channels so that you have a full 1 day trial on it, and hopefully you're able to use it to make some money tomorrow. Alrighty. Yep. Sorry. I think I talked pretty quick, but I tried to close everything off in like 15 to 20 minutes, and there's a lot to cover. So yeah, if you need, you can watch it on like 50% speed or 75% speed. All right. Talk to y'all tomorrow.